the key thing for today, hopefully this is why everybody's excited today. They want to know more about the nonsense that's going on.
Yeah.
I think I did this hopefully towards this crowd and it won't not as sterile as what you'll see out there for everybody else. So here's the new FinCEN rule, what investors need to know. Disclaimer. I have to do this now because of all the things that we do. This is for educational purposes only. No financial advice, no professional relationship, blah, blah, blah. You got it? So the FinCEN rules are going to end anonymous real estate. And I think that freaks out some people, and some people are like, whatever, because we've already done it, right? The goal is to stop money laundering through all cash deals, and it's replacing the old geographic targeting orders, and it's nationwide. There's no limit. No, your deal is too low. It can be a $0 deal and you still got to follow this. Okay. Historically, criminals used LLCs and cash to hide their dirty money in American houses. This rule is going to make it permanently not easy to do anymore. In 2016, when they started the GTOs, it was for high-end markets like Manhattan and Miami, and then they kind of slowly expanded it, and now they're just like, no, we're done. The money laundering's got to go. Big question is your deal reportable? So there's a 4-part test. The FinCEN RRE rule, which is real estate report rule. You have to file this with the Treasury. Even a $0 quit claim deal is reportable. So is your deal a residential 1 to 4 unit property or vacant land? That's the first criteria. Second criteria is a transferee on either side, an entity or a trust, LLC, corporation, partnership, trust, any of those things qualifies. Non-financed transaction means anything that's not banks or not anti-money lending mortgage companies. There are no standard exemptions at all.
No bank. Does that mean, like, say I have money in the bank and I use the bank to transfer the money, or is this a lending thing?
This is when it says no bank, it means that it's not Bank of America or one of the large corporations that are already certified as anti-money laundering operations.
Okay, so it pertains to the transaction, not if you get a loan or like non-loans or something.
Correct. So if you got a loan from a large, already identified commercial lending operation that already has gone through AML and whatever the other thing is.
And if you don't need a loan, but your money's in the bank and you use that to wire, that counts?
Counts. You still got to report.
You got to report. Yeah.
You got to report.
Okay.
So now we have the hard money and private lender trap. And why do private loans equal cash? This is going to be the biggest shock for our industry, our group, is that FinCEN treats private debt just like cash. So unless your lender is a regulated bank with a SAR, SAR, suspicious activity report requirement, your deal is reportable. So does everybody know what suspicious activity reporting is? Ron?
And so it's about a process we have to go through if we suspect somebody that's money laundering, and really then that goes to the person in the company who takes care of that, and then they examine it, and then they would send that to the authorities.
Yep.
Right. So traditional banks, in my little picture on the left, they're exempt because they have an anti-money laundering program and they have a SAR filing mandate. So if it's something suspicious, they are mandated reporters on that. Private lenders do not have federal AML requirements. They have to file the real estate report, period. So hard money and private loans are not considered financing under this rule because they're not financial institutions. You're kind of mid-grade. Do you have AML reporting and all that?
No, I just saw the document for the first time
Yeah.
a few days ago.
Yeah, so you're going to fall in every deal that goes through for residential real estate 1 to 4 units is going to have this report. Can lenders certify out of reporting? I've seen this question a lot. Can't they just go, your question was, Bethany, can't they just go get certified to not have to do this? No. AML certified like CAMS, and CAMS is Certified Anti-Money Laundering Specialist, or having a voluntary AML policy does not change your legal status. Only financial institutions, banks, and credit unions have those exemptions under the law. So everybody's going to have to be in this, period.
As an individual, does all this apply if we're doing a transaction as a person?
If you're doing it as your name, it is different. But if you have an IRA, an LLC, a trust that you're doing any of this business in, it qualifies.
Will quitclaim deeds like start sparking suspicious activity?
Yes.
Yes.
Cassie.
My understanding is it's on either side.
Uh-huh.
It's on both
So
sides.
if you're buying as a person, but you're buying from an LLC, there's still gonna be a report.
Correct.
Yes.
But if you're buying as a person from
A person.
don't report.
Correct. So here is your cascade of reporting responsibilities. So that was Eric's question. Who files the paperwork? The investors do not file this. The title agent does. So the closing agent or settlement officer must file the report, or the attorney or deed filer, or the title insurance underwriter. So that's kind of the cascade of it. Now, it could come down to where a individual is trying to get around it, buying it in personal name, buying from a personal name, and then trying to quit it. And then you're going to have to file the report because it's going into an entity.
They'll take care of it.
Yes.
Yeah, say thank you.
And if it's not taken care of, they won't close. If
charge them more.
somebody in the mix does not provide what's needed, the deal will not close. One of the things that has to be dealt with is beneficial ownership. So the thing that we dealt with was CTA for months and months last year. And we were like, oh, do we have to get this FinCEN number? Do we have to go, report and do all that stuff? And some of us did it. Some of us did not do it. Well, they've made sure it's being done by,
You do have to do it.
you don't have to do it, but it's being done effectively through this
Oh, I
process.
see. Oh, I see. So once it's filed, you're in that system.
So basically, everything we fought.
But it doesn't stop you from doing it at every transaction. This has to be filed every transaction. So if you have a controlling interest or have 25% or more ownership of any entity or trust, you must report. And they're going to take your date of birth, your actual residential address where you reside, your social security number, and copies of your ID.
What you're saying is we all need to find form LLCs and find 4 partners who are all 20%.
Well, then all 4 of you get to file a report at every transaction.
We're all 20%. None of us would meet that 25% threshold.
Well, one would, because whoever has managing control.
Manager still has to.
So you have to look through the layers. If an LLC is owned by another LLC, you get to keep digging until you get to a human. So they're going to go through, they're not going to say, okay, well, your LLC is 25% owned by XYZ LLC that's owned by 123 LLC. They're going to go through, the title company is going to be required to continue to get your organizing documents all the way back till it's a human.
That's why it's $800.
Yep, because it's a fee for everybody that third party has to look for.
LLC is an $800 fee.
No,
Oh, just that.
it's going to start somewhere between $150 to $250 per reportable entity. It could, and then when you start multiplying, say there's IRA A is partnering with IRA B, so both of those then have to have a report. And this is just on the buy side. On the sell side, then you've got to deal with, is there heirs? Are those heirs in an LLC or a trust, or are those individual heirs? And so that matters how many reports have to be done.
On every transaction or just the first one?
Every transaction.
Every transaction.
We're working on it because it's new, whether we can create a ID card that goes forward for each thing. As Steve would say, it's typical government. So what could have happened is the CTA could have just gone through and then they wouldn't have done this. We could have all just, recorded ourselves and then maybe they would have skipped this, maybe not.
Maybe not, but I would say that if you're working with the title company or something like that, it's worked with you and it's going to keep those documents, you're to stay working with that same title company. So make it a lot easier.
So they're gonna track the money. So the reporting person must disclose specific details about payments. So now we're looking at the money side. Before we were looking at the people, now we're looking at the money. So the full purchase price or value of the transfer must be reported even for gifts or transfers with no money exchanged. The report requires identifying the specific financial institutions and account numbers from which the funds originated. So you have to give your account numbers to the reporting person on this form of where the money is coming from. The report must specify how the funds were moved. If it came by wire, which is electronic transfer between accounts, if it was a check, cashier's check, certified check, personal check, what kind of currency it was. Was it physical cash, though rare in large closings, because most title companies don't take cash anymore. Or if it was digital assets, crypto or other virtual assets that were used. So all of that's going to be tracked where it came from, the origination of it, or the purchase part.
Down payments and everything like that. I mean, if you've got a person that's coming in and they're gonna track that, say you got $10,000 down or whatever, they're gonna look and ask where that $10,000 came from. They're gonna ask for the bank it came from, how you got it, and everything from that point. So
When you make a down payment, when you're buying a house with a loan, we're always gonna look at your bank account, what, 2 months, Ron? And then 2 months to make sure that where that money came from.
Right.
How far back will this go? Because I know it's 2 months, if I put my money in a bank and let it sit there for 3 months, I got clean money, or do I not have clean money?
There is no seasoning requirement on this because I asked the question yesterday. So there is no seasoning requirement. They just want to know where it came from, because the bank that's holding the money is a SAR issue. So they're going to have to report suspicious activity. So if you put it in there and it's within what the bank's requirements, the bank accepted your deposit, it's done then.
So if you go and stick $200,000 into a bank account, the bank can't question that.
Correct.
right. So I know there's another question over here in crypto. Is that what it is?
Yeah.
Okay.
So, they allow crypto right now?
Uh-huh.
They don't.
Really?
Because there's the loophole right there, because crypto is not tracked.
Yeah, it is.
Yes, it
It
is.
is now.
It's on the blockchain.
So, yeah.
Everything.
Right.
No.
When you originally get into it, they don't have any idea where the money comes from.
So
Yeah, but-
what you're saying is the money you put into the crypto. Yeah.
That's why crypto is
Yeah.
so hard to get
That makes sense.
So
legitimized right now.
there will be loopholes that will become obvious, and then we'll see what they do to respond to that.
That was just dumb.
But at the
Not to be-
moment, Cassie,
But when you're depositing, if it's over, it's either 5,000 or 10,000,
10,000.
then they're doing the report. Or if we notice on your account what looks like
structuring.
structuring, where you're depositing 2,000 a day for 2 weeks, that's going to get reported on the bank side.
Correct. So y'all understand that? Did you hear that? So $10,000 is the threshold right now for the report for the suspicious activity. So they have to start doing more in depth once you deposit over $10,000. If you're trying to stay underneath that to keep from being caught or reported, there is a federal law that's called structuring, and you can't do that either. If they catch you putting in $2,500 a week to stay under the $10,000, you're in trouble.
Brenda?
I've done my own like private money deals and stuff, but maybe not this. Does a typical private money lender or hard money lender, are they wiring you the funds to pay, or are they wiring the funds to the title company?
They're wiring it to the
To the
title
title
company in my deals.
No.
So
Other
why
people's
would-
deals,
why
they're
would you
wiring.
have to fill out the form then?
I
You
don't.
don't know the bank account
don't.
of the hard money.
The hard money lender has to fill it out. It has to be filled out on both sides of the transaction. So you have the seller has a report, the buyer has a report, the buyer's lender has a report. Eric,
One thing that, gives me solace in all this is I know that all this information the government collects will be held securely. Will never be hacked by governments or criminal organizations.
Or used against us.
Or used against me, or
not ever,
unrelated
not
things.
ever.
So what if your
buying a property and you have $20,000 in your safe at home and you want to put $20,000 down.
That's gonna be tough. I mean, at this point, you should have done it before the first.
You can still, right? Like,
You can-
the bank filing the report and saying you just deposited a bunch of cash isn't necessarily gonna lead to the feds showing up on your doorstep. They're just gonna file the report. The Fed has been looking for either is the report like a huge sum, and by that I mean like millions of dollars or something, or do you consistently get reports put against you that don't make sense? Because think about like this guy used to drive us nuts. We had a vending machine guy, and he always came in 5 minutes before closing with bags of coins. We never closed on time. It's like, dude. It makes sense that he was depositing a bunch of cash. So we filed a report and say vending machine guy collected deposits. Bam. So maybe it's, hey, I have a bunch of cash at home because I just sold my truck to Bob down the street. They're just going to write that. It's going to get
One time.
filed. It's if you're having consistent reports that don't make sense,
Yeah.
that then the Fed's going to go, we're going to get into this one. This one's starting to look fishy. So you can just take your cash and deposit at the bank. You're just going to ask for an explanation and file a report.
Right.
Right.
And you can probably do one transaction like that. But if you start buying houses again with another $20,000 down or whatever, and there's no record where that 20,000 came from. Eric?
Between the inflation and this stuff, it's really getting to where, it doesn't make sense to have a big nest egg of cash in your safe.
Yeah.
You're really better off just using it, buy your gas.
I think she brought up a good point. I mean, instead of having bills, if you have coins, it's a lot easier to get rid of coins and improve the coins because everybody has coins laying around. But
$250,000 in
true, true.
That's not.
I like to say that some of it was bills too.
Yeah, well, but most of it, I used to work for one. So
Like, if it makes sense with the rest of your life, it's not gonna go anywhere. If you have tenants who are still paying you cash, probably not, but
all right.
this is rent's collected, have a tenant that pays me cash.
So how the funds are tracked is in the real estate report. So you have I don't know if that's the number of the report, that's what came up, the 111 field form, which is the new residential report filed with FinCEN. It has 100 fields, right? Wow. So the title companies are all exporting this requirement to a third party. So that's where your fees are coming from, is because they can't afford to continue to employ extra people to just fill out this form all the time. So they're hiring third parties to do it. There are verification standards. There will be reasonable reliance. So reporting persons can generally rely on information provided by the buyer or the trustee. So they're going to, for the most part, take your word for it on these forms. Okay. However, for beneficial ownership and certain payment details, the reporting person is going to have to obtain a written certification from the transferee or their representative stating that this information is true and accurate, which is why they're pushing it off to a third party to do the verifications, because Johnny Title Closer doesn't want to do all those things and maybe has too many things on their plate to be actually very accurate with it. Title companies must maintain these records, including the payment details and certifications, for 5 years. So that's a long time to maintain all of this stuff and maintain complete security of all this stuff for 5 years. So why is FinCEN tracking the funds? They're trying to close the all cash loophole. Historically, transactions without a bank mortgage, non-financed, didn't require the same level of anti-money laundering and suspicious activity reporting as traditional loans. So they are starting to define non-finance as any transferable if it does not involve a loan from a bank or financial institution that is participating in anti-money laundering programs. So this includes pure cash and wire deals, seller finance transactions, private lender financing if the lender has no AML obligations, identifying illicit activity by tracking the source of funds and the beneficial owners simultaneously. FinCEN can identify when illicit gains from corruption or fraud, are the examples, are being washed through high value real estate. The cost of getting it wrong. There are civil penalties of up to $1,430 per day for negligent violations. There are criminal penalties up to $250,000 in fines and 5 years in prison for willful violations. The title companies are going to simply refuse to close without this information because they are not interested in these penalties.
I'm surprised they're not using forfeiture laws and taking the property too.
Well, there's always that coming.
Well, don't give me any ideas.
So,
We are recording.
I already have them.
FinCEN has made it clear these are not mere administrative errors, but they are federal violations. And the transferee is an entity or trust. The buyer is a corporation, LLC, partnership, or any form of a trust. So all of those are subject to all of this. So you have your civil penalties, you have your criminal penalties, you have pattern of negligence, gets more fines, willful and intentional evasion, the greater of $71,545 or the entire transaction amount is the penalty. Action steps for today is how to prepare your business. So what you should do is make sure you have updated operating agreements for all of your entities and your trusts. Make sure you gather closing checklists, get your beneficial ownership stuff together. Make sure that if you have partners, you have all of a copy of the driver's license, copy of all the things that you're going to need. So if they're on a cruise or stuck overseas because something happened in the world and they're stuck over there, your closing will not get held up because you have those documents. So try to get all that together in advance and keep it in your files.